The Great Wealth Transfer, a global crisis has just begun. What we're witnessing in the global financial markets isn't the end, but merely the beginning of a massive crisis. Many are panicking and selling off stocks, believing they've suffered heavy losses. However, for the big players awaiting their chance to buy the dip, current prices are still too high. When will it be cheap enough? That's when the market is devastated, when even those who never cared about stocks fall into despair, and when the assets of countless individuals are virtually given away. This is precisely the scenario of a great wealth transfer, where the lifelong accumulated assets of millions will pass into the hands of the capitalists. Signals from the big players. If you've been paying close attention, you'll notice significant moves from seasoned investors. Warren Buffett. Since last year, he began selling US stocks and accumulating a huge amount of cash. Though mocked at the time for being out of touch, now that the market is plummeting, Buffett has emerged as a winner. It's not just that he sold at high prices, but what he sold that matters. His sale of Apple shares, a company he once held most of, is a clear sign that the scenario was predetermined. With the US imposing the highest import tariffs on China, where most Apple products are manufactured, Apple's stock has plunged 35%. This shows Buffett not only avoided the stock market crisis but even divested before the new tariff policies were announced. A host of other billionaires, it's not just Buffett, Bill Gates, Mark Zuckerberg, and Elon Musk, have also been selling shares of their companies since last year. Even Li Ka-shing is eager to sell ports to withdraw cash. Could all of this merely be a coincidence? This indicates that regardless of who is president, the script and outcome are already set. Tariffs are just one of the tools used to ignite this crisis. The capitalist game, interest rates, and tariffs. US capitalists are playing a two-part game to manipulate the global market. Round 1, interest rates. By raising interest rates, they pull money from around the world into the US, weakening global economies and assets, after which they will gradually collect assets at the bottom. Round 2, tariffs. This is a direct form of stealing money from other nations. When the US imposes tariffs on a country's goods, that country has two options: increase product prices, shifting the tariff burden to consumers. This makes products more expensive, reduces sales, leading to unemployment and economic recession. Maintain product prices, bearing the full cost of tariffs themselves, resulting in losses and business failures, also causing economic recession. Devalue currency. Some countries might proactively devalue their currency to offset tariff costs. However, this means their national assets also lose value proportionally. Regardless of the choice, countries hit by tariffs will struggle to earn dollars, their economies will weaken, national assets will be sold off cheaply, and their currency will depreciate against the US dollar. This is precisely when US capitalists, with a strong dollar in hand, will collect assets globally, from currencies to depreciating assets. Where did the money go? When the market collapsed, when the US stock market collapsed, evaporating trillions of dollars, many only saw their accounts evaporate without understanding where the money went. In the stock market, if someone loses, someone else profits. When the market falls, those holding stocks, primarily retail and foreign investors, will lose money. Conversely, those who short sell, selling high and buying back low, will make money. Who are these short sellers? Besides large short-selling corporations, there are those with insider information about tariffs. Even President Trump's social media post advising to buy stocks just before he temporarily suspended tariff policies for 90 days caused the market to rebound, suggesting the possibility of insider trading. The US government faces two major problems: depleting treasury. The government is running out of money for spending and risks a shutdown. No one is buying government bonds. Since 2021, US bonds have been continuously sold off. To solve the first problem, the US stock market can become the government's ATM. By intentionally creating market volatility, triggering crises, short selling to make money, then pushing the market back up to trap retail investors, they can generate funds. This process needs to be quick, sharp, but not too prolonged to prevent the market from dying completely. This is supported by Trump's own words about a friend earning $2.5 billion in a single day from a market collapse. Regarding the issue of unpurchased government bonds, the US government wants to trigger a market crisis to force funds from the stock market into government bonds. Although there was an initial slight increase in US bond prices when tariff news broke, prices later fell sharply. indicating that Wall Street players seized the opportunity to sell off. They are stockpiling cash in preparation to collect assets at the bottom. Furthermore, China and Japan are also covertly selling US bonds to counterattack. This suggests that Trump's attempt to shift money from stocks to bonds has effectively failed. Global liquidity crisis. The U.S. temporary suspension of tariffs has two reasons: to temporarily address the government's funding shortage. They are facing counterattacks from other nations. This round of tariffs is essentially just a test run. It's similar to interest rate hikes, both aiming to detonate the global economy so U.S. capitalists can acquire assets everywhere. However, this tariff hike has become the fuse for a global financial crisis. Currently, U.S. stocks, currency, and bonds are all in freefall. Saving one means losing another. Crucially, the Federal Reserve and professional capitalists are not intervening. This indicates the U.S. government might have to reborn from the ashes by triggering a financial crisis, making the whole world bear the consequences on their behalf. The reason for the rapid fall in U.S. stocks is the phenomenon of margin calls. When the market collapses, banks demand that investors repay loans used to buy stocks. If they can't pay, they are forced to liquidate their stocks, regardless of price. When many people face similar situations, a large volume of shares is sold off, driving prices down drastically. To avoid this, investors are forced to sell other assets, European stocks, Japanese stocks, crude oil, Bitcoin, to raise cash and repay bank loans. This leads to a global liquidity crisis. Many people are selling assets, but very few have the money to buy them back. Solutions and opportunities. To resolve the liquidity crisis, the Fed will have to intervene by expanding its balance sheet and printing more money. There are two options: intervene now, maintain high interest rates, and inject money into the market. The stock market might see a slight recovery but no major boom, and could even continue a long-term decline. Wait for a more severe crisis, more likely. This is what the Fed did in 2008 and 2020. They will print unlimited money and lend it to U.S. capitalist corporations at 0% interest. When the world collapses and global assets are sold off cheaply, these corporations will simply use the newly printed money to acquire assets worldwide. This would simultaneously return U.S. stocks and global assets to the hands of U.S. capitalist corporations, while also solving the problem of unpurchased U.S. bonds and drastically reducing interest payments thanks to 0% rates. This is why Buffett sold shares in U.S. banks, because when a financial crisis occurs, banks will be severely impacted. The bottom buying opportunity and preparation. The time to buy the dip is not now. Current stock and asset prices are still too volatile and risky. Investing at this moment would only yield small, quick, and unsustainable profits. We need to patiently hibernate and focus on protecting existing assets. Current strategy: convert currency to gold and Japanese yen. These are defensive assets that help preserve value. Short selling experiments. But these are just trials. Real short selling will occur when the Fed or the U.S. government triggers a financial crisis and U.S. stocks completely collapse. Wait for the Fed to expand its balance sheet and release money. This is when we will gradually buy the dip by following the trend. The opportunity to get rich, similar to 2008, is returning. Those who had nothing became millionaires after that crisis. We, as retail investors, have the advantage of flexibility. We don't need years of preparation like Buffett. We just need to wait until the money flow is certain, entering the market at the exact moment stock prices are about to be pushed up. We simply follow the trends created by the big players, make money, and exit. Tariffs are also a bargaining chip the U.S. government uses in international negotiations. Countries unwilling to face tariffs will be forced to comply with the U.S. and buy U.S. government bonds. If they resist, their national assets will be sold off cheaply to U.S. capitalists who are holding large amounts of cash, waiting. A global economic war. Despite many countries declaring resistance, they ultimately have to sell U.S. bonds, causing U.S. bond values to fall, the U.S. dollar to continue depreciating, and capital to withdraw from the U.S. This shows that the world is choosing to face a financial crisis rather than buy U.S. bonds. This latest U.S. tariff hike may have reached a point of no return, as U.S. stocks, currency, and bonds are all in free fall. The U.S. tariff increase is not about bringing manufacturing back to the U.S. The U.S. can simply print money to buy resources and products made by sweat and tears from all over the world. This is a massive wealth transfer, outwardly targeting other nations, but in reality, affecting ordinary people worldwide. Whether you are in business, investing, or just diligently working, your assets will lose value or face inflation, economic recession, and currency depreciation. All of this will silently transfer your wealth into the hands of U.S. capitalists. If you missed the initial phase, weren't able to exit at high-risk levels, or don't have much cash, you can still choose to remain indifferent and watch your assets evaporate in the later stages. Or, you can prepare for the upcoming opportunity. The important thing is to align your views, understand the investment philosophy and methods shared, and make them your own. Don't wait until the opportunity arrives to ask if you should enter, if an asset is still worth buying, or what to do if you're stuck with losses. Once an opportunity passes, who knows how many more years you'll have to wait. The situation ahead will undoubtedly become more volatile. However, due to time constraints, this discussion ends here for today. I share free knowledge on how to become wealthy, an entrepreneur, an investor, and achieve financial freedom. If you don't want to miss out, follow my channel, turn on notifications, and share this video widely. I sincerely wish all of you who like this video to achieve financial freedom soon. If you found just one or two useful insights in this video today that help you live better, I am content.